it's just an installment sale. And we're just adding this trust to perfect this installment.
Essentially, this is really ideal for this high net worth individual that is looking for a legal, sophisticated strategy to defer capital gains tax.
Yes. And just so you listeners know, how do we know it's legal? If anyone ever comes to you with a new tax strategy like Brett or Scott or Mark or anyone else, you got to ask a number of questions. How do we know it's legal? First of all, it's IRC 453. This goes back 90-year-old tax law. This is longer than the 1031 exchange. It has been around. Most people just don't use the seller carryback because it's typically short in term and it's not diversified and it's not liquid and it's not necessarily you're probably going to pay the tax anyways. The second thing is, how long have you been doing this strategy? Collectively, as a group, with the law firm who started this and the estate planning team, over a 23-year track record, thousands of transactions, close to 3,000 transactions now. Okay. The next question you want to ask is, how many IRS audits have you survived? And the answer is 14. Not one single issue with the structure. In fact, they did a formal audit of one of the audits on the tax attorney and the other founder, who is my business partner. And basically, they said, you're just doing an installment sale. You guys are being creative on what you're doing. So I would push back on you, Mark, to say, yeah, it might be sort of complex in the sense that you've never heard of it before, and we're being creative on how we're doing it. But really, it's just an installment sale, and we're just adding this trust to perfect this installment sale. And so, but it gives you so much more flexibility than just the 1031. And oh, by the way, the 1031 doesn't work for businesses. I've yet to find someone who's done a 1031 with a business. The second thing is, it doesn't work for high-end primary homes. We did a $26 million deal in Newport Beach. It was a $6 million capital gains tax above and beyond the 121 exclusion, right? If you live in a property, primary home, you get $250,000 for the first part of the capital gain. $500,000 if you're married, $250,000 if you're single. But above that, you have capital gains tax that does not qualify for a 1031 as primary home. This works for that. So we help the couple defer $6 million, okay? Very powerful. And then they can, again, put it into passive investments or even active investments if they want to do it themselves by partnering with the trust. So I'll pause there again because maybe I created more questions.
You got Mark at Newport Beach. That's you hooked him. That's